Good day, fellow investors. Last summer, I launched this YouTube portfolio where the goal is to educate, learn more about investing, various businesses, the risk and reward, structure that into diversified portfolio, and also in the process make money. All here for free on YouTube. And we did okay as I took this snip, I think last week. We are at 1,175,000. The portfolio was started, as I said, last summer with 1 million. So that is a good performance given the diversified strategy. This is the snip of the portfolio that has built itself over the last, 8 months. So this might be a better showing. We shorted Tesla, made some money there. One company got acquired, but there is a lot here that doesn't fit me anymore. Made money there. There isn't such noise anymore, so I have to restructure it. But also I want to take in your feedback and change a little bit here also the portfolio structure. So this is the current portfolio up to now, will completely change in this video. So the initial plan was to do a 20 stocks to follow portfolio. This is a demo portfolio. Later explain how it works for me. When somebody comes to YouTube, it is unclear what is what here, why is what here, and you always give me feedback. So Sven, give me stocks that are a clear buy. What should we buy? And when I make a video about what are the best buys or buy stocks, that videos get the most views. And then I thought with this portfolio, when it is diversified, you don't know what is what is why, and said, okay, your feedback is, the clear feedback on YouTube is, Sven, give us buys. And that's exactly how I'm going to restructure it so that you have interesting buys, and I will always try to weave in the educational component in those buys over time. And then, of course, we are here to make money, so also make money with whatever we do. But keep in mind, I'm going to give you buys, but if I make 6 out of 10 buys good results, I'm a genius. As Peter Lynch says, in this business, the business of investing, if you're good, you're right 6 out of 10, you're never going to be right 9 out of 10. So I'll keep the stocks to follow, but bet bigger so that you clearly know what is an interesting risk and reward situation. Just to give some more color on why am I doing this, so YouTube demo portfolio to get ideas that might develop over time into something more. The same, but I think with better businesses, is something that I do on my research platform, covered stocks, demo portfolio. Whenever there is a business that offers good returns, good business to follow, to learn about, that is also a good risk and reward situation, but might give even better opportunities, that fits the same research platform portfolio, the covered stocks on my research platform. From there, I source the really good buys into my model portfolio that now has, I think, 6 stocks. So this is the cherry on the cake. And then there is my own investing, Sven Karlin, that has just 1 position now. So this is my process of learning, of knowing about the business. And let's now discuss stock by stock to even give more detail and color on that process. One of the interesting stocks that I considered interesting was Warner Bros. Discovery, because it was an oversold spin-off, as those dividend people that got the stock sold without thinking what they are selling. And I also wanted to see, okay, high cash flows, what's the potential of the business? And you learn so much, but just slowly, tangentially following such a business over time. But now the question is, okay, I followed, I owned, even if it's a demo portfolio, it works for me. Is it a really good opportunity going forward, or it is fairly valued for the risk and reward? Keep in mind that you own something like this and then you sell if it's not good. And even Warren Buffett, as we discussed in this video here, that I'll put here the card so you can watch it later, he also trades a lot where he sells 9 of the 10 stocks he owns. And the same thing is what I'm going to do here in the portfolio with Warner Bros. Because it simply doesn't fit my long-term idea. It did fit the spin-off idea oversold, but now it's a little bit different as the spin-off oversold situation is done, of course, so long after the spin-off. I've looked always at the business. Okay, the revenue is there. They expect great free cash flows and growing free cash flows. They said they will be at 8 billion going down the road. If that happens, the stock will double or triple. That is clear. But there is this issue, the debt structure that is there, 50 billion of that. And do I see where will this business in this era of tech, of you watching YouTube now, do I see where will this business be 10 years down the road? No. So I have one certainty, that 50 billion of it, an uncertain future, which doesn't make it a value investing, it makes it a leveraged bet, which means that this stock can go 3x if that leverage issue is solved over the years, which then will lead to comments, Sven, you idiot. No, I'm just explaining the risk and reward, it doesn't fit. And later, when we restructure things, we will sell it in the portfolio, also close it. Let's go to the next stock. RUBIS, the unloved company. I discussed it also 9 months ago, last summer, when we started this. And then I said, this is interesting to follow for the business, big dividend yield with some businesses that grow. And I think this still holds over time. I need to make a video specific analysis, deep dive now on this, because the more I follow it, the more I like it. And perhaps it will also fit the covered stock on my research platform. So here you see the benefits for me when it comes to these YouTube portfolios. And that's why I think this is a win-win-win situation for all. So please subscribe and hit that like button if you get the value here. Now, when it comes to the business, great returns, net income at the group 263 million euros, increased dividend, so 2 euros dividend, really a cash flow machine. And they also entered some renewables that have some positives and negatives, in my opinion, but this is more to be discussed then when I make the deep analysis. What is RUBIS? This is it. So nothing sexy, just a boring logistics, energy delivering business. So LPG, fuels, some renewable electricity now, bitumen and terminals. So logistics, boring, cash flow boring, but there are some interesting things. 50% of EBITDA, Africa, Caribbean, and then some of it from Europe. So if you want exposure to Africa with an 8% dividend, that's also something to follow. They have done some acquisitions entering these renewables. And then I think what's better, to buy a new company that does renewables or a company with an 8% dividend yield that goes into renewables, that knows the legal stuff, delivering energy and such things. Plus they have Africa. And that's why it's a very interesting risk and reward. 8% dividend makes money. It's unlikely that people in Africa are going to drive Teslas 5 years from now. So stable business, anything can happen, but they are diversified there. And this will now lead to me making a deep video on this. This is a YouTube portfolio stock, so we'll keep covering, learning, and then seeing how it fits the portfolio. And then I'm going to buy more later in the buying and selling part of the portfolio. Just to show what's been going on with the stock. Of course, everybody hates oil stocks. And then RUBIS, every other oil stock jumped from here significantly, but not this one, which makes it interesting. Maybe the market doesn't see it. The market capitalization is very low. The P/E ratio is just 10 and the dividend yield is good there, 7-8%. So something to follow over time and then learn more about it, which is what we do here. All right, the next stock in the portfolio was Newmont, a gold miner, and the educational strategy there was to follow Ray Dalio's exposure to gold and all-weather strategy, where if it goes down, you simply buy more. If it goes up, you can rebalance your exposure and portfolio. And if I look at Newmont over the last year, yes, it had some volatility. We bought here, I think during the summer, bought a little bit more. Then I had to sell here. I didn't follow that closely. Then it went down. Now it's up a little bit. But if I compare it to gold, actually Newmont since last summer underperformed gold significantly. Therefore, I'm thinking again, it is a process. Investing is a process. Why don't I add a comparison here and apply this Ray Dalio strategy with the gold miners ETF? It follows closely gold, thus it gives me the volatility there, but even a bit more of volatility than just trading gold. So I will sell Newmont, just leave the individual miner issues there, and then apply the same strategy, all-weather strategy, to the Van Eck gold miners, which will give me the same volatility in gold prices, but will avoid this. This is where they do something individual miners, and there you can lose all the advantage you could have gotten by others. Here also big drop with Newmont. That doesn't happen often, but here and there, and that is a benefit and also a risk. So Newmont out, Van Eck miners. For this all-weather strategy on volatility, it is much better to use an ETF. So we continue with our educational here, and we will also make money no matter what happens to gold. Now, we also discussed MICRON in a video. I'll put a link to all the videos in the playlist for the YouTube portfolio. You have it, but also I'll try to put as much in the description below. Then I said, okay, let's buy it for those cyclical value investing, follow it over time. However, we are already following Intel. So I said, okay, let's just to lower the confusion, eliminate MICRON, and then I'm sure you will let me know in the comments if it goes lower and it becomes a better buy. Facebook, we bought it. We made good money since we bought it when it was trading at a P ratio of 10. Now the stock is up 143%. I don't think anything changed in the business, and now the P ratio is 27 on the expensive, exuberant side. I will let it all there for those exuberant growth investors, not more for me. Thank you, goodbye. Now, also, I think it was October, we nailed the bottom when I said China is simply oversold. It is just noise. I said, okay, let's buy it. We bought big. I already sold one part of it, but now I don't know whether it is still noise or not, how the fundamentals fit there. So that's something that then doesn't fit why I bought 6 months ago, 100% up, money made, you're welcome. Now I will close this, and then when I have again risk and reward positives, then we can buy again. So speaking here, I think we bought 100,000, sold then significantly higher, made money in the first trade. This is just from what I left in, made again more money there. So positive, positive, I will close that. Intel, to follow the semiconductor cycle, I think it's a little bit better than where we bought it. So here is Intel, bought at 27 when we said, okay, it's good to start an open position. Now it's positive. It has there, the position is 45,000. And here I want to play a little bit on the cycle, but I still want to follow Intel as we did that over the years here. Let me lower this to 30,000 just to put it there, follow, take off some profits there, and then see how it goes over time. Next one is Google. As I follow it, I discussed it. I cannot see what will be the growth going forward. It will depend on the economy. So it is a good business at a fair price. But as I said in a video, 50% down would be an even better price. It can happen. It probably won't happen, but no need for me to have this into my portfolio now. So the next portfolio here is Berkshire. We made money on Tesla, shorting it for fun a little bit here. This Devro was sold on acquisition, made money there. Berkshire is the lighthouse, but it is extremely expensive, as I discussed in this video. So I'll just keep it with the minimal exposure there. 10,000 I invested. When it goes lower, and it usually falls 50% once in a decade, then we will certainly make it a core position. ADM is a good business, a really good business, stable business, but at current prices, yes, I can keep it in the portfolio just to follow it, but I'm following it anyway, so I'm going to say goodbye to it just to avoid confusion. And we also made some little money there, so nothing wrong there. Also, Apple is going out because, as you know, I am not a fan of Apple because it's simply too expensive. So let's restructure this, buy, sell, and let's go to the portfolio. So let's restructure this just to show you the account before we start. A little bit down on daily exchanges, nothing wrong there. If we look at the positions, here we are. We have one losing, we will lose $43 on Newmont. Okay, if it would have been the Van Eck would be better. Everything else is positive, and let's now just start stock by stock, re-explain everything and build this position. So where is the portfolio? Here we said this is going out because I don't know whether I will follow it. The idea there has changed, so let me sell that. Next one we have Warner Bros. Again, it didn't convince me as a buy, as a business to hold for longer, so nothing there. Then we have Amazon. We said we're going to buy this one as a strategic play, so I need to buy, what was it, 116,000. So let's do this. So position 1,200. Okay, let's do 102,000. Buy, override, and transmit. Okay, 100 free. It is not working. We will try to edit it here. Bid ask. Let's just go on the ask, and there it is. It is filled. ADM, sell the position on the bid. We will follow it over time. Berkshire is a hold. Apple, just close the position. Position tag, submit, transmit. RUBIS, buy more. I said again, buy a big position, 117,000. So I need to buy how many of them? 50K? No, 5,000 shares. Let's see. Yes, here we are. Submit, override, and transmit. By the way, this is interactive brokers that I use here for demo, but if you want all the markets covered, again, you can click in the link in the description below to support the channel. Intel, we said we will sell 15,000, that is 480. Okay, on the ask, on the bid, sorry, and let's go. Then what else do I have? Google, I said there might be better times for Google, and MICRON, the same, sell position. Let me just check what's alive in the portfolio now. WebD out, made the money. If I would have sold 2 days earlier would be better, but okay. RUBIS is there, not yet working, but I'll play around with the price over the day, maybe it will work. Newmont, not sold yet. Meta, we have to close. Intel okay, Berkshire okay, Amazon okay, ADM not yet sold. So also Facebook, then to close it, where are you? Meta, sell position on bid, submit, transmit. And let's see what is still open. Meta, let's see what is the bid, ask, let's sell on the bid. This is simulation, so it's not really direct. Okay, and RUI buy, I cannot buy. Okay, let me see the bid and ask. This is Europe. Let's just push the price a little bit higher. Okay, here we are now. And then it gives me the best price there. As I said, it is simulation, so it takes into account things a little bit later. I have to then just change it a little bit to fill it completely. It will fill over time. Check again the portfolio. What did I do right? What did I do wrong? RUI is better. Newmont still not sold there. Intel, Berkshire, ADM. Newmont and ADM. Yes, I said I will sell Newmont, sell the position on the bid, submit, transmit, and let me immediately buy the VanEck ETF, minor ETF. A lot of restructuring now, but it goes easy. Once you get a hang of this broker, it gives you much more power to buy globally. And we can discuss also whether to focus on US or not. What is this? IS6? No, I don't want it on the IS6. ARCA. All right, stock. Thank you. Buy. We said 100,000. Let's see, with 3,000, where do we get out? Let's really do 100K. Okay, and buy on the ask, submit, override, and transmit. And that is working there. And let's recheck our portfolio. And I think ADM is still the one left. RUI, just I have to still full the position. This is done. Berkshire, then Amazon is done. And that's it. Let me just sell ADM here on the bid, just to be clear. And that should be it. ADM is filled. Just RUI, let me just change it here, update a little bit to see at what price. Of course, it's a demo, so it will fill over the day or tomorrow. Okay, we'll leave it there for now. Close the portfolio, recheck everything. So RUBIS will likely get filled slowly to $150,000, 140,000 euros. Doesn't really matter. Then we'll follow it over time. This is done dollars. Intel there following. So we now have 3 positions, which I think are interesting from what we followed. So as I'm doing the S&P 500 analysis stock by stock, I'm sure that out of the 500 stocks, there will be something interesting. So keep following. And let's now go to why I bought that much of Amazon. So this is the portfolio now. This one, as I promised, I will make an in-depth analysis of it to see the value, risk, and reward, and we'll keep following it here in the portfolio. All weather, just a volatility play, playing on that gold Ray Dalio strategy for portfolio exposure. If it goes up, we'll sell. If it goes down, we'll simply buy more. Follow for that semis cycle that I think could give a great opportunity 2024, 2025, especially if we see a recession. Just 10K to follow. It's a lighthouse which we compare everything else, and as I will discuss now the strategic buy here. Amazon, it is a strategic buy for me because of the following reasons, and it's extremely important that you understand the risk and reward here. I want it to go down. So Amazon, 500 billion in sales over the year, and this is what Wall Street simply cannot comprehend. They're losing money. Net margins are negative now. They cannot model it. When will they go positive? Cash flows are negative, 11 billion negative. How in the world am I, as an analyst, going to value this? Long term, yes, but that can mean 10, 20 years when they focus on optimization. For now, not, because they are spending 50, 60 billion on building their infrastructure. And now, if I look at Amazon, the market cap is 1 trillion. It is down significantly since people were still excited about Amazon. Of course, revenues have slowed down a little bit, but I want to show you this. Remember the dates, 2013 excitement about Amazon, and then it was 25% down. It was down for almost a year and a half, and only then it slowly recovered. What has happened here, let me show you. So this is Amazon's net income chart for the long term, and you can see here, this is from Ticker. Well, I like to get this long-term information, and you can sustain the channel if you check it out on the link in the description below. And you can see here 2013 net margins, negative net margin, and the stock was down, what was it, 26%. Then things were great, great, great. And then again, Amazon says, let's just invest in the infrastructure, build, 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 and the net margins go down. They keep investing for the next growth cycle that will eventually come, and then the market will love it again. If Amazon, let's say, grows just 7% per year over the next 10 years, it will double in the next 10 years. But will Amazon grow at 7% with inflation? I think it will grow faster, at least 10%. It means that it will double, worst case scenario, in the next 7 years. If it doubles 1 trillion in revenues, when you look at the destination and the strategy and the moat they have, you see that, okay, it's difficult to displace them. We are using it, even things that you don't know run on Amazon Web Services, etc., etc. And then I'm thinking, is it worth $1 trillion? Likely fairly valued. If it goes down 25%, it won't stay for long that cheap. It won't go to 700 billion, and it won't stay there even if it goes there. If it goes there, I simply buy more. Oh, by the way, as we are here on Ticker, let me show you also RUBIS that we discussed earlier. And this is always a very nice way to look at a company. So I simply go here for the 20 years. And then if I click on net income, here you have it. So RUBIS was constantly positive, profitable over time. They made some acquisitions here, so it was a little bit up and down, but something to look when it comes to investing into a company. They haven't had a losing year for, what is this, 20 years. So as said, first buy then at 150,000. If it goes down 25% or more, another 150K buy for the portfolio. And then if it goes down 20% more, I'll try to sell something else, something that I'm following, or something that simply doesn't fit again, and then buy more, because when it rebounds, we simply make money. So from all the stocks that we started this portfolio, this is one of the best risk and reward strategic approaches to this. Don't come back to me if Amazon now goes down 25%. Oh, Sven, you are such a loser or something. No, it's part of a strategy. Another educational, let's say, part of what we are doing here. So thanks for watching. If you want more ideas, likely higher margin of safety, check my research platform. Thanks for watching. I'll see you in the next video.